long, so I apologize for that. I'm a bit late on our midweek briefing. So midweek briefing, we have another packed agenda from data perspective, from news perspective, from politics perspective. So the volatility, as you can see in the markets, is back since yesterday. So as soon as the U.S. market is back from the Monday's holidays, so a lot of volatility with dollar being dominated on global recession fears. So the overall theme of the week so far, it has been with recession fears to remain the main driver in the market, and that's why. Let me also, I'm not sure. Let me just add my. Okay, sorry. Let me share my MT4 as well. My MT5, I should say, because this one is my MT5. So. Okay. So yeah. Okay, so I was ready to say, let me share it. Here we are. That's the dollar in the daily that time frame. And I'll zoom it in to see that those hourly candles that we got since yesterday, that the U.S. market was back from the Independence Day. So it's the same thing of theme. It's the same thing that we have seen last week as well. So a lot of boost on dollar. So dollar is the biggest gainer so far, gaining, having demand, along with the yields as well. So once again, all the major currencies under pressure against US dollar, stocks in a very sharp fall, while dollar is the main beneficiary of all so far. Even yields came a bit lower today. At the beginning, actually, yes, on the close today, they came a bit lower. However, they move along with the dollar. So we have yields back higher, recovering some losses. But so everything is based on the recession fears. So the recession fears remains the key driver. That's why we've seen dollar gaining against safe haven demand, and along with a bit of a recovery into the yields. We have even the long or the short term one, so the 5 year, the 10 year, have turned a bit higher today. However, in general, they are below their highs. Okay, so below their highs, but much richer than the late May performance. So that's okay. I will avoid a bit on yields, but have in mind that yes, dollar remains the key mover. So we had not solely breaching and breaking the 20 years highs, but if I put the monthly chart on, and unfortunately I cannot go to 20 back before 2008. Let me check my MT4 whether I can show you. Sorry for that. Let me check. Come on. No, I can't. Okay. Because it's MT5, I cannot go beyond 2008. But it's yes, we are back to more than 20 years highs for dollar index. Just a breath away from 107. Okay, 107. Let me zoom in a bit. So that's daily, that monthly candle, sorry. 106.94 has been breached today. So just a breath below the 107, while there is no an indication of any reversal for the time being, even though dollar, that's the daily chart, and back to the daily chart, it has breached some over bought levels, as you can see over here. So it closed yesterday outside Bollinger's, extending gains today again outside Bollinger's. So that's a lot of overbought condition that could or needs a bit of a correction at some point, but that's not the time so far, it seems, since both RSI, stochastic, bank D, all three of them keep extending to the upside, suggesting that there is further room to the upside for dollar. Can you see that? There's no reversal yet. They all point to the upside, suggesting that there is further breadth to the upside for dollar. So that's the daily chart. Then dollar is back to the upside after a bit of a correction that we have seen in the beginning, the very first, actually in the last 2 weeks of June. Okay, that was a bit of a correction, but extended gains aggressively and overtook the 106 level and ready to break the 107. So factors that added to the dollar strength, obviously, is a lot of factors, but the latest, which should say, if we concentrate on today's performance, is the data that we got from the US just how long ago? Let me just check out. Just few minutes ago. So we have still the ISM services in less than 2 hours from now from the US for the June ISM services. We have Mr. Williams, Fed Williams speaking soonish as well, but we have seen so far mortgages rate. So let me add to the 1 hour chart so I can show you what happened and how this strong rally, yesterday's strong rally, resumed and extended to the upside. So this is something that's going on since the beginning of the day, since the European Open. So more bets have been seen or have been triggered, more buying positions have been triggered in the sorry during the European session, with the latest one. So a big bullish candle. It was 3 hours ago, mainly extending gains to the upside. So what we have, sorry, what we have. So other than other than the fact that the markets continue to price in further aggressive tightening from the central banks, not solely the Fed, but all over the world. Don't forget that yesterday we have seen Australia hiking another 50 points. Okay, so that's the first back-to-back move of RBA in its history, reinforcing the fear that the central banks are having for recession, and reinforcing with this way the recession fear for investors as well. And let's not forget that dollar is a safe haven. Okay, that's why we have seen a lot of shift from the traditional safe havens such as gold or bonds into the dollar, and everything else is under pressure. Everything else is under pressure. Gold, bonds, stocks, yields as well. We've seen a closing down yesterday, even though they reached again. They were richer today, but yeah, the only or the key mover so far is a dollar. RBA reinforced, as I said, the tightening, resumes the pricing in of the investors for pricing from tightening from all the central banks, while along with concerns that we have seen overnight that Shanghai may go into a lockdown again, okay, because of infections again, is something that once again added a lot of volatility into the market. Why? Simply because a lockdown in Shanghai implies on less demand from China, right? China is the second biggest economy in the world. a big one of the big one a very very good big consumer. So that's adding to the fear, to the sentiment. Also, just few minutes earlier, we had the mortgage, and I'm gonna share the. We have the mortgages applications just earlier. We've seen a detection, a drop at 5.4%. So what that means for the very last, okay, of in June actually, up to July 1st. So the very last 2 weeks of the second quarter. So the last 2 weeks of June, as I was saying. So what that big drop, that steep drop implies that implies that in the housing sector, okay, in the United States, the aggressive tightening of the Fed, it was something that that helped, I should say, that will benefit the housing sector. Okay, so the fact that we are seeing a drop on the application for mortgages from people, it means that the housing sector will benefit in the second half of the year from the unwind of the housing sector, headwinds from the aggressive spring seasonal factors. So that has helped. It's something that it has provided, if you prefer, a bit of um, a turn a bit positive for the dollar. So it means that less people are applying and claiming for mortgages. Sorry. Okay, it's not a very significant. It's not a data that the Fed is really interested to check. Let's not forget that they are mainly focused on jobs and on the GDP other than mortgages, but it is still something that they take into consideration. Uh, in general, the this black. Okay, let me get back to. In general, the focus is over here for the day on the ISM services. Okay, whether we're gonna see an improvement, okay, and a rebound on the services, since there are no further lockdowns, and the only thing that struggles is inflation. The market is inflation and the very high oil prices, energy prices. So we're gonna wait and see. What is very very important on today's ISM services index is to wait and see whether we're gonna see a rebound, whether we're gonna see some kind of a recovery, even a tiny one, even just a few pips so far, to getting more far away from the neutral zone, which is the 50 level. So this will be something that it could be positive. It could support the sentiment. The index has been above 50, okay, which 50 it's the mark that shows us, that separates us, expansion and contraction, okay? So any reading above 50 suggests expansion. Any reading below 50 suggests contraction. So the higher above we get from the 50 level, the more the positive signals is giving for a country's economy. So it will continue to see some kind of a recovery on the ISM services. It might mean that Fed's action had started slowly with some baby steps to support the economy, and we could avoid the worst. But let's wait and see. We have another hour until that is out. But a reading above the forecast, or even better, above the previous um, release, uh, is something that is expected to support further the dollar, in general, the US economy. On the flip side, however, we have FOMC minutes, which is also the one of the two highlights of the day, and is something that it could add first a higher volatility, but it's also something that is already driving the market so far today. So we don't, it's not like we are waiting anything new from the Fed minutes. We already know that based on last week's comments from Mr. Powell, and I will get back to the MT5. Sorry, I haven't any. I haven't checked any of your questions yet. So let's get back to MT5. That's the hourly chart. Keep extending. Up, moving average. I keep pointing to the upside. MACD the same, RSI the same. Stochastic the same, RSI the same. So 107 remains a key resistance level for the asset in the near term. We're just 10 pips below it for the time being. But nothing for the time being is suggesting any correction intraday to the downside, as long as we don't see either a cross of the moving average as a bearish cross, or or the other side to start pointing lower, or the stochastic to bearish cross and turn below 50. Nothing for the time being is suggesting on a potential pullback or correction. It might be correction because anyway the fundamentals are supporting overall the dollar. Okay, don't forget that. So on the upside, 107 remains the resistance, the key resistance level, which an immediate support level for the asset is that latest up fractal at 106.56. So that's clashing with our current 9 exponential moving average. That's the support level in this intraday, in the very, very short time frame. So yeah, but let me finish what I was saying before we go to the technicals. So yeah, FOMC minutes today. We don't really expect anything new, okay? We know, based on what Powell repeated last week, that they remain in track with the tightening. They will continue to their aggressive approach. But what would be important, and what we are expecting and would like to see, what the market in general would like to find out on tonight's FOMC minutes, where the attention is whether the next rate hike will be 50 or 75. Okay, so how aggressive the tightening, but more precisely, um, the timing. So whether the next rate hike will take place in July or in September. Okay, so they did hint it, an aggressive 75 hike in last week. Okay, but markets in general, market participants will wait and see whether they will see whether they manage to gather any further information from FOMC minutes tonight. So we don't really expect anything new. Okay, they already said that they remain commitment to their action, to their tightening, in order to contain inflation and they want to bring inflation down at 2%, but the conditions have changed a bit. Okay, so we have seen that even though they were the most aggressive central bank so far, they haven't managed to bring inflation down. We have seen inflation at 8.6% in May, so the conditions have changed. It means that so far the inflation has not been impacted. So that's why we are waiting for any signs today in regards to the main inflation measures that they are thinking to take, any additional inflation measures that they're thinking to take, and any additional measures that they are thinking of to take in regards to the slow growth as well, not only for constraining the inflation, and whether the 75 points that the markets are pricing in right now is, I don't know, less aggressive uh, scenario, or a very aggressive scenario. So this is the thing, to figure out whether the 75 points that currently the markets are anticipate for July will be confirmed, or whether we're going to see any hint that they will uh, go a bit more conservative or even more aggressive. Okay, so it's anything, any information that we gain from tonight, it will be extremely important. So, and that's why the anticipation of the Fed minutes today is also something that is adding to the dollar move. Even though we have plenty, a lot of, we have another 5 hours until tonight's FOMC minutes, but yeah, um, what we are seeing is that dollar remains to the upside ahead of the Fed minutes, with recession concerns adding to this safe haven demand. And let's not forget the global PMI's data that they also added to the recession fears, because they were in line with expectations, something that is not really positive at this point, but is something that really confirms recession, not only in the US but globally. Nonetheless, let's get back to our dollar and back to your questions. So gold, pound Oz, pound cable. So when do you think that the index may show weakness? Okay, I'm not sure whether you are referring to a shorter or long or medium term, like in the daily chart. But for the time being, our immediate support, and I'm referring to 1 hour chart intraday basis, is 106.56. So a pullback over here, or even a breakout of this level, could suggest a bit of a correction. By saying a bit of a correction, we are referring either the asset consolidating a bit, finding some support, or turning a bit lower because it has breached overbought levels. In general, this strong move this strong upwards move that we've seen since the beginning of June, it doesn't show any reversal sign. Okay, so it could trigger our attention for a potential pullback only if it comes down below the 105.54. That's the daily chart. So if it turns back down here again. But the dollar in general is in an uptrend, well supported by the 20-day moving average, or this trend line that I have just put back connecting the lows. So remains over on a positive bias. So any move, any pullback, as long as it doesn't touch or breaks the 105.50 level, it can be considered as a correction before another attempt to the upside, my dear Joy. That's the daily chart. Now, intraday, we're gonna see fluctuations. I mean, nothing can go up forever. It needs a bit of a correction. That correction might be just some sideways movement before another step to the another attempt to the upside. It might be a pullback. It might be some sideways movement, and etc. For the timing, intraday, we keep having bullish candles. I'll put the 30 minutes chart on. Okay, the 30 minutes chart on. So you see one, two, three, a doji one, four, five, another doji one, six bullish candles, so uptrend. Currently, in this session, we have seen a bit of a pullback, a correction. But if it sustains a floor, it sustains a move as long as it remains above this support, the support that I have put over here, the 106.56, as long as it remains above it, the asset remains in a positive outlook intraday. Hopefully that was clear, dear Joy. If it breaks that level, then we might see it retesting yesterday's lows. But as long as it's above it, it remains positive. So these putbacks might be just corrections, intraday corrections. So I'm gonna go to gold since you are asking for it. There is not a lot of attendance today. Not sure why this is it, but nonetheless. Uh, So, gold, I would like to remind you a bit, a few facts, because we didn't have a live analysis so far this week. But there were other also, okay, before I am analyze um, gold, I would like to take a step backwards and check together other major US currencies, such as the euro dollar. Is it might be one of the biggest losers, even though they are all the nearly all the dollar crosses have suffered a lot of losses this week, not solely because of the strong dollar, but because of the really weak euro, really weak pound as well. We had seen some data yesterday and today that have added further pressure on euro. So this is the daily candle, euro dollar. So that's yesterday's close, and that's today's performance. So we can say really big bearish candle yesterday, closing outside Bollingers with Bollingers extending lower. So that implies that it hasn't breached to the oversold territory. Instead, we have more and more sellers entering the euro dollar, and it's pretty much the dollar in my breach to parity. What we mean by parity is when breach one, the level one. So when the euro equals with 1 euro equals with $1. What really happened? What happened is that the negative economic data continue from Eurozone, first of all. So adding further to the recession story, to the contraction story for the Eurozone, we had weaker than expected Eurozone retail sales. We had manufacturing orders a bit to disappoint us a bit in Germany, little better than expected, but still a weak number. We have also we have also sorry we have also have the ECB. Let's not forget the ECB. That is the only one that it hasn't taken any action. Is not expected to take any action during the summer. Okay, and that is something that is adding to the fear that the Europe is in a huge crisis, a new crisis. It might be a crisis that we have never seen in the past, and yeah, that so that is also on is that decline, other than the negative eurozone data, that extension lower, or and the further possible extension lower, is due to the ineffectiveness of ECB, and also let's not forget the political scheme, the geopolitics, and the that we have Ukraine war still on, with Europe being the biggest loser since it was dependent from Russia in regards to the gas. So now let's leave that behind. We've seen ECB's lunch yesterday, saying that if the fragmentation in bond market is unwarranted, then we should be as unlimited as possible. So what that means, that's, let's not forget that the bonds purchase is a tool that every single central bank is using in order to support the economy, right? They purchase bonds in order to add money into the market and support the market and provide some cash flows. And there is another crisis tool. So that is something, however, that it was taken as a sign from the markets that the ECB will make very substantial provisions of possible purchases in the near future. That's why that added further pressure on the euro. Okay, because the more the liquidity ECB that the ECB could provide to the European economy, the more the weak the euro could get. Something with the news play a huge effect on the dollar, of course. The latest one was the mortgage, the fact that the applications have been detected. So that means that has been seen as a positive sign that the housing sector in the US might benefit in the second half of the year. Dear Kelvin. What else I wanted to mention about euro, though? I forgot. It will come to my mind later on. So, okay, something else. European countries, Eurozone as a whole, is the biggest, as I said. Let's not forget ECB, okay, that is really late. It hasn't acted at all. Actually acted, but very, very inaccurately and very late, and it still didn't tighten. So it's the ECB that is adding pressure on euro against all the major indices except yen. It's also the sharp rise in energy prices. So with the fail out in Ukrainian war having a negative impact on the European economy, is the Europeans' consumer confidence that they contracted significantly and significantly fast. Okay, is the pressure or inflation pressure that is still a big problem for Europe as well. So these four reasons are the key movers for Europe, and they will continue to keep euro and the European economy under a lot of pressure, especially if we consider the differentiation of Europe with the rest of with the other countries. So over here we have euro dollar. It fed out aggressively. Okay, so even if we consider only the yield differentials, the rate differentials between the ECB and the Fed, solely this points the direction for euro dollar. It provides a strong dollar against a very weak euro. Just even if you think only the rate differentials. If we think also all of the rest, the data, the European data, the fail out of the Ukrainian war, the energy situation, the energy problem that the Europe is having, all these are adding to the pressure on Europe. That's why you might have seen a lot of headlines stating that Euro could breach parity. so it could get equal with dollar. So to breach one level, then the level one. Um, yeah, okay. I'm saying a lot of fundamentals. I'm not sure whether you're interested on those, but yeah. Yes, how can I join the community? You have just joined it, dear Dinho. We're here. You can ask anything you want, but I need to go back to arcade traders because I ignore him a bit. I'm really sorry for that. Now that we have covered the most of the fundamentals, I'm gonna go to gold. You asked for it, and actually, it's something that you should all have on your watch list. That was a very significant floor. Okay, over here, as you can see, it might be the most significant floor of the year. Why? It's a floor that it was retested and remain intact since the beginning of the year, but broken significantly just yesterday. And you see that. Finally, the gold breached and broken significantly this area, this support area that is providing some kind of a support to the gold since the beginning of the year, right? And it was not only breached but significantly broken because we can see the asset closing with a full body candle, no significant tail lower, closing at 17. Let me tell you, 17. Let me change it. Okay. I want it thick, okay, like that. Perfect. So closing at 1764 level yesterday. Can see how big this candle is. Sorry, and the fact that it hasn't got a tail lower implies that sellers are in control. And any reversal to the upside, it might be limited. So 1766 is the current price of the gold. So if I need to put the weekly chart on, just simply because we need to find some support levels, the next support level for gold. Anyway, you know that gold is inversely correlated with inflation. As long as inflation is higher, the gold is being used as a hedging of inflation, so it's having an opposite effect. So that's why gold remains under pressure. But let's not forget how strong the dollar is due to the aggressive tightening of the Fed, something that adds further on the downtrend of the gold. So the next floor for gold is at 1750. Okay, the latest down fractal back in November 2021, and down here 1723. So the September 2021 floor, but also some kind of a support that it was seen back in the second half of 2021. So these are the next support levels for gold. Further deterioration below that, it could open the doors to 2 years bottom 1670 territory. Okay, like a free fall. As you can see, I will put my other template, the one that I'm using for the daily charts. And as you can see, okay, it's something that I pointed out last week. We finally have a bearish cross, a death cross also known in our daily chart. Can you see that the 50-day is below the 200? That is a death cross. That implies to further selling pressure for gold. Okay, so for the time being, any near term reversal, it might be limited. Okay, so that's in the daily chart. Now, for those that they are interested in intraday stuff, such as 1 hour, 4 hour, 30 minutes, etc., we can see, let me get rid of it. This one, we can see that it's after this big decline, sharp decline yesterday. The asset is consolidating so far today. So it's really tumbling between 1760 and 1773 area. I'll put the 1 hour. Again, you can see that consolidation clearly. Even the Bollinger Bands are narrow, suggesting lack of volatility and a lot of indecision. That's the 30 minutes chart as well. So up and down between these two levels. So a break outside the 1760 or a move above the 1773 could point at the potential possible direction for the near term for the gold. For the time being, remains sideways, bouncing between these two lines. So we need to wait and see whether it will break that level and open the doors further to the downside, or whether it will attempt to recover some losses. Okay? Pound Oz. Pound is an asset that has suffered also because of the politics as well, with Boris in the spotlight. Um, so let me just we have a lot of resignations in UK right now. It was the housing minister Stuart Andrew that quit. That quitted actually today, if I'm not mistaken. Um, so and sorry, get some water. Whew. Also, there were other, for example, um, the Mr. Sunak, the Prime Minister, the senior UK cabinet minister, also Mr. Sunak, announced yesterday he is leaving his position. Is the health secretary that also resigns. Um, they said that they can no longer work with the Minister Johnson. So there are a lot of things going on in UK in the political scene, something that adding further pressure on sterling, adding further pressure on FTSE as well. If you have checked, if you have checked that decline yesterday was due to the politics and this big uncertainty that we have in um, in um, in the in the UK right now, and more precisely to the government. So there is a lot of lack of confidence in the government that is not really helping the UK assets such as sterling, FTSE, and etc. So even though Johnson has survived a non-confidence vote, okay, still the fact that we're seeing a lot of resignations today, um, um, it's pretty much raise a question whether it will be at some point forced to resign as well. So a lot of sterling's also suffering a lot of pressure due to the politics. It has been some recovery on FTSE today, as you can see, but quickly get back to a consolidation mode. So it was some kind of a limited floor, top bottom, sorry, ceiling. That's where they see. But let's get back to pound, because we asked for pounds, and more precisely pound Oz. So pound Oz. So here it is, daily chart, 1, 2, 3 candles lower, 30 and third day in a row to the downside. But where I would like to focus on, my dear, was what it was Chile. Okay, Chile. Let me get rid of the separators, period separators, because I want to show you these double top. It was the very first sign that we had, the very first bearish sign that we had in June, suggesting that we might see a reversal. Indeed, a reversal confirmed on yesterday's closure, in which the asset reverted all the gains that we have seen in June and closed below the 20-day moving average and at the floor and below the nearest support at 1757. Today it gapped down and extended losses. So pretty much the next support level for sterling, it's down to June's lows and to 170 270 territory for pound Oz. This is pound Aussie in a daily chart. So 1-2 candles, you can see a long tail yesterday. So the fact that despite how much the bulls have fight, the sellers managed to close the session negatively and below the 20-day moving average, it means that the tellers took control, and indeed this has been confirmed today as well, since we have a gap down and further decline with the key area, the 170 to 70, sorry, this area over here, seen as the support of the past April, May, June, of the past 3 months. Okay, if you are trying to figure out a closer support level, that will be on the Bollingers and the 174 level. Okay, 174 key round number, clashing with the lower Bollingers, so the immediate support level for pound. In general, the outlook, however, as you can see, it's negative. Why is that? Okay. Even though MACD is in a positive territory, it started turning lower, but it hasn't confirmed a break and a turn into negative territory yet. But stochastic keep extending lower, RSI the same, cross below 50 and keeps pointing lower, as you can see over here. No, you can't. Yes, you can. Cross below 50 on, let me be precise. It closed below 50. Oh, yesterday. Yes, yesterday. And it points further to the downside. Stochastic the same, lower highs. MACD a bit mixed, but the positive area was a bit limited and it started losing momentum, as you can see. The MACD lines are below the signal line, something that adds to the bearish outlook of pound Oz. So next support in the daily chart is the 174 level, and afterwards, on the break of that, the doors are open to 3 months lows and the 170-270 territory. Intraday now, nice. Oh, we have over here 1, 2, 3, 4 candles lower. However, this is an oversold territory. It's 1, 2, 3, 4 times for the four session, the last 4 hourly session, the asset is outside the Bollinger, so it needs a bit of a correction. But any pullback, any reversal is expected to be limited, because as you can see from the momentum indicators as well, we are in a strong downtrend with a lot of negative bias. Sellers are selling pressure is increasing, so any rebound is expected to be limited before the asset extends further lower. So where we're standing, let me get, okay, here it is. So if I put my Fibonacci's, so you can see that the asset remains below the 23.6 Fibonacci level on this latest sharp down leg. So as long as the asset doesn't turn above 175, which is my 38.2 Fibonacci level, then the outlook will remain negative with the very near support level at 174.37 and the very next one at 174. Let me round them up. It'll be easier for you. 174. Okay, perfect. Which is our Bollinger, by the way. Don't forget that. The upside, the 78.2 Fibonacci level. Come on. 175. You see? Precise. That's our immediate resistance level. It needs to break that level in order to suggest that it might turn another 30 pips higher or even gets back to yesterday's range. Okay? So any reversal is just a correction because the asset is already oversold. It's just a correction before further downwards movement for pound Oz. Let's shift to cable. Pretty much, it's very similar picture. That's a 30 minutes chart. The asset, oops. Here we are. The asset remains below the 38.2 Fibonacci level. Corrected a bit. Let's read our charts. MACD is still negative and extended further to the downside. Stochastic showed some kind of a reversal, but remains really close to the 20 territory. RSI remains below 50. So the negative overall remains under pressure. So as long as we don't see a return and a closure of our hourly candle above 38 or even 50%, the this outlook, the negative outlook intraday is unlikely to change. But if you see the candles, I mean, consecutive bullish candles with the asset breaching the 50%, okay, then we might see the asset retesting the 119.45 or even 119.70, which is our next resistance area to the upside. Okay, Tim? But yeah, we cannot really say something like that right now. You see, even the Bollingers, the moving average are flat. So flat is not something bullish. Flat is just consolidation. So we might see consolidating sideways until it finds it gets back to either its downtrend or any kind of direction, so intraday direction. The long term, nothing really changing. It has been to the downside since for more than a year now, and nothing really shows that pound will recover anytime soon. Yen, oh yeah, yen. What can we say about yen? Okay. For yen, firstly, I would like to clarify that fundamentals remain in line with a pretty weak yen against dollar for the rest of the year. That's why dollar yen shifted to 136.50. Really weak yen based on the super ultra accommodative Bank of Japan and the very aggressive Fed. So that's a fact. Okay, we are still consolidating on the very high territory, and the outlook is unlikely to change anytime soon. That's in the long term. Now, I'm sure that you are interested in the short term. So we had a pullback, okay, because of the risk. Yes, dollar is getting stronger, but it's because of the recession fears, okay? So that has the recession fears have, as I said, trigger a lot of safe haven demand. That's why we have seen yen benefiting a bit. Okay, whew, so yen over here down to 134.94. So went back below the 135 handle. So yen and dollar were the ones that they have picked up separately from the haven flows. Okay, so what we have intraday. Okay, I'm gonna get back to the Aussie soon, guys. Okay, intraday we have seen the asset entering a downwards channel since since yesterday. Let me. Okay, it's not a perfect channel, but oh, sorry. Yeah, that's a bit better, I think. So it has entered downwards channel since yesterday, and it has turned in the lower area of the channel just earlier, a few minutes ago. So, and you can see how long these down tails are. So there is still a lot of steam to the downside. MACD extending down, stochastic pointing further to the downside, RSI the same, moving averages are pointing down. So Bollinger points down. Yeah. So dollar again in a downwards trajectory since yesterday, and nothing is really provides a rebound yet. Any rebounds like this and this and this and this and this were limited because of fear, because of having flows. So um, it turned into the lower territory of the range 2 hours ago, then close below the middle line, suggesting that there is further decline and extending lower right now as well. If I put the 30 minutes candle, you can see it. We had a bearish cross 2 hours ago, an hour and a half ago, confirming further decline. And this is what happened with the candle extending lower. Okay, so support. So over here at the latest low, 134.94. A break of it could open the doors to the next support level, which it's taking us back to the 134.80, 78 level. So it's a floor that we have seen on the 1st of July. Okay. To the upside, so resistance is at 135.50 pretty much. As long as it doesn't breach and breaks that level, doesn't breach it or break it, the downtrend, the asset is expected to continue moving into this down channel. Okay, a breach. So, okay, yes. So that was for yen. Aussie, because two people are asking about Aussie. What do you about the bear taking the lead? The bull is taking the lead, breaking the first resistance. Aussie, let's see. So see. Where's my Aussie? It is 25% rise today. Not sure if you're referring. I guess you're referring intraday DR, um, DR Kelvin. So, okay, let's see it together. Firstly, let me. Firstly, okay. What we have over here. MACD is still negative. Okay. MACD is still negative, even though it has appreciated. So there was a strong rebound since yesterday afternoon. The asset broke in the 38.2 Fibonacci level, but I can see Bollinger shrinking, getting narrow. Resistance, the next resistance is at 50%, so 0.6825. Let me put my intraday setup, there Kelvin, and let's check together. What is my intraday? No, sorry. Oh, sorry. Give me a second. Sorry. Ah, this is my intraday setup. So where we're standing over here. So as we said, it recovered more than 38.2% of yesterday's losses. But it closed above it, slightly above it, but struggling to break these latest two up fractals, retested several times today the 50% Fibonacci level, which is placed at 68.27. We have a lot of mixed signals over here, Kelvin. Indeed, it appreciated today. It recovered more than 38% of its losses, of yesterday's losses. It appreciated, it moved up by 0.25% today. But MACD also rised. It didn't enter the positive territory, but it rise. It means that bulls are supporting a bit um, the the asset, but it's a very mixed. We are getting a lot of mixed signals. Why? What I can see over here is stochastic, okay, posting lower lows. Okay, that's very interesting. Okay, what we have. Since yesterday afternoon, we have seen the asset appreciated, right? Lower highs, higher lows, right? But stochastic is declining. That's divergence in the near term. And that explains the mixed picture that we're getting. What I mean, it recovered more than 80% of the losses that we have seen yesterday, but struggling to break the 50%. So it retested it one, retested it twice, retesting it right now, okay, but turning down. So fail so far to break the 50%, which is our which it will be the signal that it will turn back high. The only signal that it could get back to 0.6895, it will be if it closes above 50%. So it failed so far to do that. The Bollingers are started from very wide to get narrow, so that suggests low volatility or lack of direction, so consolidation. And fast moving average are pointing to the right hand side, suggesting consolidation. So, what I see also, what I'm getting so far, it's more consolidation signals rather than further support and further push. So this bounce might reach, this recovery might reach to its end. This is what I'm seeing over here. And now with this divergence, so the asset posting higher lows, but stochastic posting lower highs, it means divergence. So suggest that the asset is ready to reverse. So what that means is currently to the upside. So it might be, we might see a potential reversal to the downside again. So you need to be a bit careful with this one, Kelvin. A lot of mixed signals. Now a bit of divergence. It might bridge to the uptrend might bridge to its end. So yeah, you need to wait and see a bit. There is no confirmation that it will go. There's no confirmation to the upside, neither confirmation to the downside for the time being. What there is some consolidation signals along with a divergence signal. RSI remains very, very close to the 50, to the neutral zone. Yeah, yeah. Wait and see. Yeah, yeah. Neither in the 50, in the 30-minute chart, we can take anything else. What we are seeing is the asset struggling to extend further to the upside, struggling to break that latest up fractal. You can say, but it broke it over here. No, it didn't broke it. It retested it, but quickly turned back down again. So yeah, we have weakness. Yeah. So take care on this one. In the daily chart, Aussie, regardless of what we said about the intraday setup, the daily chart, the Aussie remains in a downward trajectory. Okay, so you can see that remains to the downside. So a break of yesterday's bottom could open the door further to the downside. Now, Oz dollar cat, it was Zibusiso asked for Oz dollar cat. So let's start with the daily chart. Let me get rid of some lines. What we have over here, it was in a down, it was in a downwards pressure. And yesterday we had a really, really huge candle topping at 130, retesting once again this resistance over here, this high at 130.80. That's a resistance that we haven't seen, with that we have seen for the last 2 years. You know that dollar CAD is supported by um, um, is affected, I should say, by oil prices. But what we have over here is the strong dollar theme. So that way it bounced higher. What is key is to see whether it will sustain this gauge, because for the time being it's consolidating. It remain it remained tumbling around the highs, yesterday's highs. So only a move at the 50%, so only if it comes down to the 50, to the mid of this candle, of yesterday candle, only if it breaks that level, so the 129.60, only if it does that, we can it can signal, it can indicate a retest and a breach of June's bottom, okay, at 128 territory. Yeah, at 128 territory. So it's consolidating. Dollar CAD is consolidating since the beginning of since the second week of June. So bottom is the 128, top is the 130.80, and mid is the 129.58. So a breach and break of the mid area of this channel would open the doors to the bottom level. Now, while a breach and break of the upper level could open the doors further to the upside and to the Fibonacci extensions. So 130, 130, 130, 170, 132 level. Okay, that's a daily chart. Let's now get a step backwards and check our intraday setup. What we have over here, it had a sharp rally yesterday, but due to the dollar, due to the strong rally, but some correction followed. So let's put our trend lines on. What we have over here, we have a pretty much something like a descending triangle. So the asset is moving within this triangle. Yeah, we need to see a, either a break of this 130 level. Okay, to be precise. See, 130 round number, triple zero number. So 130, a break of 130 could take the asset down to this support area over here, resistance that has turned into support, 129.50. Makes me see something. Okay, okay. Sorry. So a break of 130 level could bring the dollar cut down to 129.60 or even 129.50 if and only if breach and breaks the 130 level. Triple zero number, a very important round number. Now, unless if it continues to consolidating within this descending triangle, so we need, it's currently sitting in a descending triangle. So what you need is to wait until it either gets outside of the descending triangle to the upside or to the downside. Then is the only way to figure out the next the direction. More visible colors for the indicators. They are white and green. I don't know how bright I can make them. You're referring to the indicators, right? Yeah, okay. Maybe I could try a thick yellow again. Sorry for that. Sorry, my bad. Maybe I should make them thicker. Okay, that's the 1 hour chart, by the way. We have further bearish cross from stochastic, indicating that there is further steam to the downside intraday for dollar cat. So, yeah. Yes, sorry, DRSM. I will try. Maybe I can save that as it is. Oops. Control Z. Oh, I will have it in mind. I will try to do it right now. Maybe it's the thickness is the problem. And let's make this yellow. Hopefully this is helping somehow. Maybe you could do that thicker as well. And this thicker as well. Yeah. Okay, I'm gonna save this for next time. Save. Yeah, Yeah, I will save this as it is. Hopefully, this is more helpful, DRSM. Guys, I ran out of steam to be honest. I'm live for an hour for sure. More, actually. Okay. So, one more question. Dora Swiss on a 4 hour chart, another safe haven that our friend asked for. Where's my dollar Swiss? So let's put it on. It would be better a 4 hour chart. Yes, that was about to say right now. It's better to add your preferable time zones as well, time frames. So 4 hour, you said. Okay, what we have over here. I'm gonna do something else right now. I'm gonna try first of all to delete all the indicators. I have a reason for that. Now we'll let you know what I'm doing right now. I'm gonna do some price action analysis. So here we are. Perfect. So why I have done that? Because okay, I want to check a bit. This is the 4 hour chart, DR KWA. So we have seen the asset, the upside since June 29th to be more precise. Okay. So oops, wrong. Up. Okay. In this point over here, ah, give me a second, sorry dear. What we have over here, we have, trying just to have some, okay. What we have over here, we have something like a flag, so a bit of a correction. So flag over here on this uptrend, broken up, so suggesting further push to the upside. 1, 2, 3 candles to the upside. A bit of consolidation over here with this as our support level, the 0.9669. And just earlier, a break of our very last resistance area. Retested it, broken it, it closed higher, turned quickly lower right now, but that support level remains intact with the asset holding in an upwards trajectory. So where we're standing, so the upwards movement remains the the asset remains in an upwards movement there, KW A. So as long that this floor is not doesn't break, the asset, if you can see, it keeps posting higher highs, so remains in an upwards trend. Yeah, so yeah, that's a positive. That's a positive outlook in the 4 hour chart for dollar Swiss. Okay, we'll have a bit of a consolidation here. It broke it. It right now is retesting whether it will get back to it or whether it will sustain further move to the upside. You put your 1 hour chart, you can see that we have two doji candles, a bearish one, but it hasn't. We need to wait and see in the next, whether in 15 minutes from now, in where this hourly candle will close, whether it will get back to this ranging market. If it gets back to this ranging market, then consolidation might continue. But as long as this level hasn't break and remains the key support level, the positive outlook is unlikely to change. Now, I will put back my indicators just to get further confirmation of what I'm saying. So here is the 4-hour chart with intraday indicators on. So, okay, we have seen fast moving averages flattening a bit. So that's consolidation signal, nothing more, nothing less than that. Our we had uh, last week a bullish cross of 20 above 15 day period moving average, and they keep and the 20 keep extending away from the 50, so that means more bullish bias. MACD keeps rising, so another bullish bias. Stochastic slowed down a bit, but remains, anyway, it's a short-term indicator, but yeah, anyway, it remains above 50, right? Remains above 50, and actually, okay, this suggests some intraday potential correction. Okay, but you see that the majority, if we exclude stochastic, all the rest, they point to a bit of a correction in the very near term and further and positive outlook as a whole, because RSI is the same. RSI is turned a bit lower, but it was holding above 70. So these corrections that we are seeing in both stochastic and RSI are just this intraday, you see, this intraday correction. Okay, hopefully this covered you there, KWA. As long as we don't see the asset breaking 0.9670, it could possibly continue consolidating, but overall remains positive. Okay? So, guys, I'm gonna call it a day. I got a bit tired. Um, ISM services is just 11 minutes away. Remember, further slowdown in the numbers could indicate, could suggest further recession fear. Okay, um, while even the slightly move higher, it could suggest some positive sentiment, and we could see dollar resuming gains. Keep an eye on the data, wait until they are out. They might cause a lot of volatility. The same stands for the FOMC minutes today. They might cause a lot of volatility. So make sure that you have done your risk management and placed your stop losses and targets before in your trade, and you didn't left anything without stop loss or target level and without an appropriate risk management. Or try to avoid the news and wait until the market comes down a bit. So 11 minutes to go, 10 minutes to go until the ASM. Overall, dollar remains on bid. So any pullback, it might be just corrections we can see here, here right now, here, but overall remains in a strong rally. So a bit of a rounding bottom over here. We might see some kind of a handle, but as long as the 105.50 remains intact, dollar expected to remain on bid. So I would like to thank you. Have a great day ahead. Take care. It's an FP week, so volatility will remain extremely high. We're gonna have another Facebook and YouTube live with Stuart this time on Friday during the NFP release. Yeah, so that's it from me. Hopefully you found our session useful. Have a great day ahead. Take care and see you again tomorrow. Bye bye.